Anastasia Amoroso, welcome back. It's good to see you.
Good to see you, Scott.
Thoughts on this market before we get to those two specifics?
Well, I think the upside move is justified. I heard you asked the other guest whether he was surprised, and I think the word is justified. Look, this morning's CPI report and the retail sales report, I think it really supports the notion that we are in the last mile of fighting inflation. And look, core CPI, which is 3.6% today, was about 2 percentage points higher a year ago. So I would say we have made substantial progress. And if the Fed keeps on hold, which is what they'll do, it's certainly not a hike. I think that holding pattern is quite supportive for markets.
Because I've heard some try and make the argument that this also means that once we hit these new record highs, that it might be the last mile for this bull market. Doesn't sound like you buy that.
No, I'm not a buyer of that, Scott, because I do think there are a lot more reasons to be optimistic than pessimistic in this environment. And, a lot of people talked about stagflation over the last couple of weeks, but I don't really see the stag, nor do I see the inflation in this market right now. When you look at retail sales, for example, this morning, it seemed like it was a little bit soft on the surface. But when you think about retail sales and the report we actually get with that, it's about people buying goods. It's not so much about people buying services. And I think that's exactly what people are doing right now. It's travel, it's lodging, it's concerts and entertainment. So when we look at the real-time measure of what the consumer is spending on, that is still very, very strong. And of course, if you look at the Atlanta Fed GDP, for example, that's running just shy of 4%. And the other thing that I'm encouraged by, Scott, this is not just a U.S. phenomenon. We have seen growth pick up and broaden out globally. About 6 months ago, we're pacing about 0.8% global growth. Today, that's closer to 4%. So that, of course, that economic growth supports earnings, supports companies, supports markets.
Okay, so what's going to take us there?
Well, I think what's going to take us there is continued earnings momentum and also people pushing out this notion of a recession or even a soft landing.
What sectors? That's what I mean. I'm sorry, Anastasia. I should have been more specific. That's my bad.
Well, I think it's both a macro and a micro question, to your point. I think broadly macro is going to take us there. Is that earnings rebounding towards 9 or 10% earnings growth by the end of the year? But what's going to take us there sector-wise, I do think that it's the cyclical parts of the markets also catching up. If you look at the first quarter, it was all about big tech reporting something like a 65% earnings upside. But as we go towards the fourth quarter, we do see other cyclicals catching up. So I do like broader, bigger financials, not the regionals. I do like consumer discretionary stocks, and I also like industrials. So I'd be looking to construct a basket of cyclical stocks. And of course, semiconductors should also be a part of that.
All right, we'll see you soon. Thanks for the thoughts, Anastasia Amoroso, joining us once again.